Rhino and Jetty have both been around for the better part of a decade. Both were founded with exactly the same sort of problem thesis that 78% of Americans live paycheck to paycheck. When you move into a new apartment, you're required to pay a security deposit on top of paying first month's rent. And so there's just a lot of households that struggle to cover that cost.
Welcome to HR Tech Trailblazers. I'm Alex Kostecki, one of the founders and COO of Clair. And I have with me a good friend, Georges Clement, who's CEO of Rhino Jetty. Thanks for joining us.
Thanks so much.
And would love to just start by getting a quick intro about your background. Obviously, what you did before running Rhino Jetty, and then we'll obviously talk a lot about what you guys are doing over there.
So I'm the CEO of Rhino Jetty. We provide an alternative to traditional rental security deposits. So we give renters a solution to lower that pretty high upfront cost of security deposits in order to move into a new rental home. My background is really a combination of digital product and technology experience. So I started my career as a product manager at a couple of tech companies in New York. And then also housing policy. So I ran a nonprofit in New York City called JustFix for many years that built data services and digital services for renters across New York City to learn about their rights, to learn about their properties, and to take action. So have worked a lot on the city, state, and federal level in the housing world. And then after running that nonprofit, took a bit of a pivot into venture capital. So I've worked as an entrepreneur in residence, an operating partner, first at AliCorp and then at Kairos. And it was while working at Kairos that we got to meet, and I got to work with the Clair team, and then also started to work with the Rhino team as Kairos sort of invested and led in the most recent Rhino round, and then led that merger with Jetty. So that brings us to today,
right?
Where we're 4 months into integrating Rhino and Jetty, which were previously independent companies that were basically direct competitors in this deposit alternative space.
How's that been, the integration? Tell us a bit about sort of what the plan is there.
Yeah, so pretty fascinating story, right? Rhino and Jetty have both been around for the better part of a decade. Both were founded in New York City with exactly the same sort of problem thesis that 78% of Americans live paycheck to paycheck. When you move into a new apartment, you're required to pay a security deposit on top of paying first month's rent that is equivalent to typically another month's rent. And so there's just a lot of households that struggle to cover that cost. So both companies, built similar products, expanded really rapidly, then, dealt with similar kinds of rocky paths over a couple of years. And so, when I started working with the Rhino team, a lot of it was just getting through that transition process of the fact that the capital markets were in a really different place, and that meant you had to change how you operated your business a little bit, right? And be much more focused on profitability than just growth at all costs, right?
Right.
And so really spent a lot of time with the Rhino team focused on sort of making that transition. And then, we met the Jetty founder, at this point almost a year ago, and started with some pretty cagey conversations about, where they were headed as a business and sort of what they were thinking about moving forward. And ultimately, we realized that we had exactly the same vision for what we were building, exactly the same roadmap of what we were looking to build over the coming years. And we would be a much stronger company together.
So you guys decide obviously to move forward with the merger, and now you became CEO of the combined entity, and you have a company you know really well, Rhino, where you know everybody, all the nooks and crannies and the skeletons in the closets and all of that, and you've got this new company you're coming, and you need to figure out sort of like what the combined vision is. What was really exciting to you at that moment where you saw Jetty coming in? Like, what really excited you about being able to work with that team, with that product, with that market that they'd set up?
So I would say, while we had the exact same roadmap moving forward, we had worked on pretty different things over the past 2 or 3 years. So even though we were running the same business, we had these really complementary pieces, right? And it really sort of fit together like a jigsaw puzzle. And that, even included a lot of personnel, right? Where they had particularly strong leadership in areas. We had particularly strong leadership in areas, and so it fit together really, really nicely. And I'll say, we got to spend a ton of time together before the deal was ever fully closed, right? And so it felt like we got to really know people on a personal level, right? In addition to really learning about, sort of their company culture, how they made decisions and what was exciting to them, et cetera. And so, it meant that day one, when we announced this merger to both teams, it didn't feel like we were necessarily starting from square one. Doesn't mean that it's not without its challenges, right? You are still integrating two companies, two different cultures, and ultimately then it's sort of reinforcing the things that really worked at each company. But you have to build a brand new culture, right? You have to build a brand new sort of vision to rally around as well, right? So that was really, really critical, is saying, this is just a new chapter that is an extension of all of the incredible work that both teams have done and the incredible culture that's been built. But ultimately, this is going to be a new thing that myself, as a new leader of the company, and all of these employees coming together, we are going to build over the next few months.
So tell us about what that vision that you stood in front of the company had to explain is. How are you seeing the combined entities, and ultimately, Rhino plus Jetty is one company delivering on a grand vision? Yeah.
The core of it is we keep the main thing, and we are the unequivocal market leader in our product category, where both companies had spent 8 years saying, we are the market leader. It's like, well, there's two of them. So, now combined, that is actually, for sure true. There is this one combined entity now that is very, very much the market leader. And so the core of it, and what we're really focused on in the first year especially, is we need to really, really make sure that that is locked down. And that is the core foundation, is we are the leader in deposit alternatives. We're 3 times bigger than the next largest player in the space. And that has to be something that we're all really proud of, and that we are operationally excellent at executing on that sort of foundation. And then we can think about, we sort of earn our way to unlocking these additional opportunities that are sort of adjacencies that make a lot of sense to move into. But we have to earn our way into that.
And is that all around sort of the huge financial event that is getting an apartment, renting an apartment, leaving a rental?
We are so focused on lowering that barrier to entry at move-in. We also think about it, and this is especially true given the product we launched late last year, which is loss of employment rent protection. We really think of that as an extension of sort of providing additional products to help renters be financially secure, not just access housing, but stay in housing, even as financial shocks may happen in your life.
Gotcha. So how does it work exactly?
The loss of employment rent protection product provides up to 3 months of rent coverage for renters who lose their job. So if you're a W-2 employee, you are renting an apartment, you have been screened when you move into that apartment that you have plenty of income to pay. But what we know is 78% of Americans are living paycheck to paycheck. That's even more so the case within the renter population. So if you think about that population is incredibly destabilized and can very quickly start missing rent payments if they lose their job. So what this coverage provides is a supplement to the state unemployment benefits to be able to cover rent so that the state unemployment benefits you receive can go towards all of the other costs in your life, right? To putting food on the table. Because unfortunately, state unemployment benefits don't cover 100% of your previous income.
Yeah.
So this supplement is really critical and ends up being this real win-win-win between renters and landlords because it stabilizes that household. They're able to stay in unit versus having to, go through an eviction process that's incredibly painful for everybody involved, and then the landlord having to also cover the costs of turning over that apartment.
Really cool.
Yeah.
How's that going?
It's going really well. I would say the macro environment actually provides a lot more urgency from property owners and managers across the country because they're looking at it and saying, they are going to really struggle as a business if the macro economy, is having all this volatility. They have a lot of layoffs in that town where their properties are. All of a sudden, that's going to mean rent delinquencies for them. So this is really a product that, they're trying to get as many of their renters signed up for as possible so that they get protection, their renters get protection if that kind of volatility actually starts to create layoffs on the local level.
Tell us just from the renter's perspective, how they see the product in sort of their cash flow and their daily lives.
Yeah, so renters are informed about this product through, marketing from their landlord or their property manager. So they're told that this is aware. This could be just for current tenants. You're going to receive a text message or email from your landlord that says, hey, at our property, you now can sign up for rent protection or rent forgiveness in the case that you lose your job. Renters are experiencing that as, wow, this is, actually incredible offer that they see as a real benefit to renting in a particular property, right? Where they feel like there's a real safety net there. How that's experienced is, a renter could be 6 months, 18 months into their lease, and they're informed that they're being laid off. They get documents that say, they can go qualify for unemployment from the state. They go file for unemployment. That is approved. They simply provide that letter from the state as proof to us, and then we will pay out that claim and we'll cover their rent for typically 3 or 4 months.
It's incredible. It's almost surprising that didn't exist before. And in Europe, that would be a government benefit. And here,
I come from a background of tenant advocacy. I've worked very closely with government on programs just like this, right? And if you think about during COVID, we provided $50 billion from the federal government to help cover rent for folks who had lost their job through no fault of their own, just because there was a pandemic and there were layoffs across the country. But that was $50 billion of taxpayer money. And that is something that, you would typically rely on the government to help fill in those gaps. But the reality is we don't have the safety net of Switzerland here. And so this is a program that is incredibly sustainable because it's truly just classic insurance risk pooling, right? You're saying in a community of 1,000 people, 3-4% of those folks are just, inevitably going to be laid off over the course of a year. And so if we're able to collect premium from that whole community, then when folks lose their job, they're able to have that rent covered.
When you think about sort of underwriting the folks that you're meeting, there's a big trend right now in embedded finance, both on how you're using embedded products to distribute, but also how you're basically accessing a bunch of data that is teaching you way more about people. I think you saw this when you looked at Clair. We've been using a lot of just like earnings data about folks, and we see that as an advantage. Are you seeing that sort of come into the rental space, or is it less about understanding them better and more about just really sniping that important moment in their life cycle?
Yeah, I would say underwriting is such a moving target, right? There's, historically, you obviously have credit scores. In the housing world, you've long had the principal metric being rent to income ratio.
Right.
They're more
the whole
concerned.
40 times rent thing that.
In
Every
New York,
broker in New York
they
tells you.
talk about it as 40 times rent, or
Right.
a guarantor has to be 80 times rent.
Right. I remember feeling that was way too high for me.
Yeah, you're like, what if I'm 35
Right,
times?
yeah.
You know, that, you know, the housing world has really focused more on the income proof rather than leaning quite as hard on credit. I would say, you know, there is so much evolution that we do and that you just see in the industry in general to look at a variety of different factors, right? Cash flow underwriting is, you know, becoming more and more common as, you know, folks are quite used to sort of this user experience of linking their bank account
Right.
through Plaid or something similar. And so, you know, being able to do some cash flow underwriting that maybe is more indicative than just a credit score. You know, and I say it's a moving target because even in credit, right, you had this headline last week that 2.5 million people saw their credit scores drop by 100 points given the student loan update, right? And so, you know, does that mean that those 2.5 million people are not creditworthy? Were there just completely innocent administrative things where someone, you know, didn't realize that they needed to update their payment information or something, and now all of a sudden, you know, their credit score is going to indicate something very different than maybe their income or their cash flow? So, you know, we try to get as holistic a picture as we possibly can, while not throwing up a million different barriers in the user experience, right? Because sure, you could ask people to verify their ID card and to link their bank account and do a credit pull and all of these different things, but like at a certain point,
Upload your diploma and just keep going.
At a certain point, there's like diminishing returns from an underwriting standpoint and just a really clunky user experience at that point. We also have seen a real uptick in ID theft and what's called synthetic fraud that you know, creates a lot of noise for our partners, where there's folks who literally have purchased a social security number on the dark web or something, and it ends up really muddying the waters of you know, underwriting and ultimately also, you know, landlords making decisions about sort of qualification levels for new renters as well.
Right. What I find the most incredible actually in that setup is, contrary to other kinds of insurance like health insurance, the landlords got a really, really keen interest in getting that sort of in front of their renters. Can you tell us a bit about like the difficulties of distributing through a large amount of landlords and pushing out new products through these big networks of folks who might not be as tech savvy as the people you have at Rhino plus Jetty?
More and more, there are these really large institutional players that own or manage, you know, tens of thousands, even hundreds of thousands of rental units across the country. But there's 45 million rental units across the country, right? Nearly half of Americans are renters. So there is an extremely long tail of the rental market that is really small mom and pop landlords, small local property management companies. So tons of opportunity to continue to serve that really quite large universe of landlords and property managers across the country. And, you know, I think we have just a fascinating model in that you have this captive audience through that sort of B2B channel to reach consumers, because, you know, they're in that unit for 2 years and then that unit just turns over. And so you get this sort of natural ability to reach lots and lots of consumers who will come through those doors.
And replace them over and over.
Absolutely. Very similar to the employer channel in that way, right? Where, yes, you have a bunch of large employers, but you also have this really long tail of you know, small and medium-sized businesses, local businesses, but there's just this incredible opportunity to distribute products through those channels.
And how do you think about just going down that tail? Because obviously, you know, you work with a large private equity portfolio of real estate. You know that there's no sort of gimmicking going on behind the scenes of whose rent was whose. The contracts are very clear. And then when you start getting down to the tail of, well, this is a guy on Craigslist who owns an apartment and he'd like to rent it out to whoever he can find, a young student, that becomes harder to sort of prove.
Yeah.
So how do you guys think about that from a distribution perspective?
Yeah, I would say that is then a reliance on other kinds of channels that specialize in working with those smaller operators, right? So, you think about a company like Appfolio, for instance, really came to market where there were these big property management systems, right? Yardi, RealPage, with millions and millions of units, but a real specialty in working with institutional landlords and property managers.
Could you describe what Appfolio is?
Yes. So these are property management systems. Think of it as the core accounting system. First and foremost, they started as accounting software. So it was literally just, can we manage the ledger for every single apartment and every building? And then they've sort of layered on, think of it as like a CRM type of system where you're managing like the life cycle of a renter from applying, right, and finding out about an apartment all the way through their journey, all the way to the move-out process, right? They've become these, big ecosystems with integration partners, so very similar to a Salesforce or a large payroll provider, where this ends up just being really the central software for property managers. So Yardi and RealPage have been, the big players in that space. Appfolio really came to market to say, there's a very long tail of smaller businesses here that do need software to help scale, help just run their business efficiently, and even just provide the kind of experience that renters in 2025 expect in terms of being able to pay your rent online, be able to fill out leasing applications online, file work orders online, etc. So when we think about distributing to that long tail, there are partners like that have a specialty in reaching that kind of audience, because otherwise it can be challenging to sort of scale up serving a whole bunch of landlords or property managers that just have 100 units, for instance.
Right. I think like those kind of alignment of value between multiple players is a problem that we obviously face as well at Clair. But how do you guys think about, we talked about the renter and the benefit there, how they view it. Obviously, huge impact. It's very clear the story in the landlord. How do you guys then think about these other distribution partners or technology platforms coming in and having to keep everybody happy?
Yeah. It is not such a great secret now that the rental housing ecosystem is this amazing distribution opportunity, right? So, in the last 10 years, you've seen a ton of what's called prop tech companies pop up, right, to provide different services using rental housing as a channel, right? A lot of those are really focused on, various kinds of insurance or financial services, kinds of offerings for renters. And generally, we've taken a very open approach, right? That's we're interested in partnering with other folks who, are similarly trying to provide more value to renters. And we want to really own our product category, but see that as a lane where we are the clear market leader. And now, in particular, after bringing together Rhino and Jetty, we are very, very clearly the market leader in the deposit alternative space, and then really growing out from there with products like this loss of employment rent protection program.
Right. One question that comes to mind just in terms of managing a company that's facing all these different stakeholders, do you see as CEO that every department's got kind of their own favorite stakeholder, whether it's the renter, the landlord? How do you manage to keep everybody sort of on the same page that, guys, we need to solve for everybody? Like, how's that been a challenge for you?
Yeah, it is very much top of mind every single day, right? As we try to make decisions balancing renters, balancing our partners, right? So those property management or landlord partners. And also, the core product, we partner with insurance carriers and reinsurers to really provide sort of the risk capital for that product. And so we also have to balance the fact that that is also an important stakeholder.
Right.
And so we have different teams that spend all day, every day, thinking about each of those stakeholders. And that is what makes them great at their job is they are obsessed with that particular stakeholder, right? And so it's really a management challenge and a decision-making challenge to be able to bring all of those perspectives together. And I think that is also really part of where the rubber meets the road in making some of those difficult challenges, difficult decisions, is really thinking about, for a given decision that needs to be made, what are actual needs, like hard requirements, and what are nice to haves from each of them. But then it's also really just building a culture where everybody understands it is a complicated type of business to run, and everyone has to sort of be thinking creatively about how we can strike the right balance. So it is literally part of the values of the company, and we have to reinforce every single day.
Right. I'm especially curious to understand from you, as also the founder of JustFix and someone who's been really close to the challenges of being a low-income renter, how you would describe those lines in the sand versus those nice to have for the renter specifically.
Yeah. So, for the renter specifically, I think we just, have to think about this is a new space, and we want to make sure that what we are delivering is 100% a product that we would be comfortable recommending to friends, recommending to family to purchase. One is we need to be super, super clear about educating folks on the product, right? Deposit alternatives are only a product category that's been around for 10 years. Loss of employment protection is brand new in this form. And so being super, super clear with renters what the actual sort of rules of the program are. And there's other little tactical things I would say that come up all the time, right? What are the kinds of prices that we charge, and what are some limitations that we want to set on those prices, right? Like, we should be targeting. We make some margin, but we're not trying to be predatory, right? And so we want to make sure that we're really conscious of that as we make decisions every day.
That makes me kind of think of, on the regulatory side, you guys are obviously a pretty complex fintech product that's playing in a super regulated space of housing with a lot of considerations that you obviously know very well from JustFix.
Yep.
How are you, and then the regulatory environment is constantly changing. I mean, like the CFPB just disappeared overnight, and a lot of people were applying for regulatory jobs.
Yeah.
And I'm sure some other regulatory body is going to keep growing in 5 years or 4 years. What has been your guys' positioning with regards to all that change, and where are you guys particularly focused from a regulatory standpoint?
We've always led with compliance, right? This is something that Clair has been really, really focused on from get-go, is get that house in order first so that you're building from a really sturdy foundation, even if it takes a little longer, right? And so we are an insurance product, right? We're technically a surety bond, but we've operated always since founding in quite a regulated market because we work with, state departments of insurance. And so that, provides a lot of guardrails around the product, completely aside from all of the housing regulations, where, you then want to make sure, obviously, that the way the product is being used by partners is completely above board vis-a-vis, fair housing laws. And so that's something that we're constantly aware of.
Do you guys feel like you have a good understanding of sort of how either this new product or the original deposit financing product is kind of displacing other financial products? Like, what would have someone done when they lost their job? Did they run up their credit card bill? Like, what was the kind of typical behavior that you think you're changing there?
Yeah, I mean, I would say the typical behavior that we have seen, and really part of the background of why we started this loss of employment protection, was that we saw how many folks were being evicted and then their security deposits completely going towards their rent delinquency, right? So, we receive claims on the deposit alternative product from the landlord. And so we would see, okay, that claim has been made because the renter was delinquent 2 months of rent. And that lease ended early because the renter was evicted, right? And so really the previous experience is that you have a lot of households where losing your job means you're losing your home. How long that process takes really depends on the kinds of regulations, state by state, even city by city. So that experience looks different based on sort of the jurisdiction, but ultimately, it ends up resulting in folks getting evicted and then trying to scramble to find their next home. And that becomes really challenging if you don't have a job currently.
Right.
So as you're applying to that next apartment, what are you going to show as proof of income, right? And that is really what we're trying to prevent. And it is such fine margins, right? Because what we're talking about is you can prevent that by just giving someone a 2, 3, 4 month bridge, right? And you can do that for a price that isn't exorbitant when they, have a job and they're earning income, and they can just pay that, $5, $10, $15 a month to make sure that they're going to get that coverage if a layoff does occur.
Right. Do you feel like that story is easy to tell to a renter who is maybe sort of high on life, setting their new apartment, has the money to be able to get that new apartment? Or do you feel like it's something that sort of isn't yet clear until you're living it?
It's a good question. And, you guys have launched new products and the kind of iterations you have to do to explain the value proposition so clear in your head.
Right.
It's
right.
Like you've internalized
if they could
this
just understand it.
Yeah, exactly. You've internalized this over such a long period of time. Like, oh my gosh, it makes so much sense, right? But it's hard to say, okay, what is the thing that is going to, and this is really like the classic insurance problem, right? Is, insurance is in case of shit.
Right.
Right. How do you convince someone that that thing is going to happen? Or that it, even if it doesn't, it's good to at least have this as backup, right?
I think it's something, one thing that we face, so obviously now we're distributing through payroll providers and working closely with them and workforce management systems to sort of put the product directly in front of employees, and that's made our job easier because we kind of hold the narrative. And you were sort of part of a lot of these efforts when you were working with us at Clair, but you saw sort of what it's like to try to convince an employer to tell exactly the story that's approved by regulators and approved by your fintech partners and banking partners to the employee. And that's something that I find interesting in your approach through landlords, is that, of course, I think the more sophisticated landlords you're working with will be less of a challenge. As you go down that tail, that becomes an interesting thing to be dealing with.
Yeah, absolutely. I think we have some landlord partners who are so convinced by a few value propositions around this program, right? One being that it literally just, makes some financial sense, right? To not have to deal with all of the turnover costs of, having to go through an eviction process, right? So there's that. But they also see it as this great sort of marketing angle, right? That's like a totally unique thing to explain about this property and why to move into 123 Main Street instead of 124 Main Street, So they're sort of seeing the benefits in a couple of ways, that they are actually either subsidizing or completely covering the cost and really just baking this in as a benefit of living in a particular property.
Right.
That, helps sort of not require that final step of the process of, the landlord then explaining this to the renter in order to get them to purchase. They're sort of explaining it just as like a free or included benefit.
George, thanks so much for joining us. Really, really cool what you guys are building. I really appreciate sort of going into all those details. And yeah, welcome back anytime.
Thanks so much. Appreciate it.